What's going on, guys? Box here, and today I'm going to teach you about the 80% rule. I want to give you guys another strategy so while you get deeper into market profile, you can watch this stuff happen. Let's start off by giving you a brief intro and summarize what the 80% rule actually is. So the 80% rule is a simple, keyword simple, yet super powerful value area trading strategy. The 80% rule states that there's an 80% chance when market opens above or below the value area and then trades inside that value area for two 30-minute candles, then the market has an 80% chance of running to the VAH. Now that you have a rough idea of what it is, let me show you some examples to drill it into your mind. We're working off the pink day. Blue day is new day start. Let's extend the value areas so we can watch it happen and make it a little easier on us. So, price opens right here on the blue day. This profile is complete. What do we see? Price meanders, comes down to where? Let's zoom in a bit. Price meanders, comes down here, right? 1 30-minute, 2 30-minute, or 15, 15, 15, 15. So right here, we officially know that we are bearish. That's what we know. Why? The 80% rule. But what do we know about trading? Nothing is free. Nothing is ever free. And so you don't see this happen, then immediately click short. That is not how this works. That is why I said, once you understand this, start watching it play out and you'll start understanding how to use this. New day started, little move up, come down to this VAH. We have officially closed 30 minutes, 2 30-minutes, so an hour, 2 30-minute candles, 4 15s, whatever you want to call it, just 2 30-minute candles, 1 hour. Within this value area, our target is the other side, all the way down here. That's our target. And so what do we notice here? This is why we don't just click short. So when we come in here, notice the volume is trash. We're not going anywhere. If anything, we made a little inverted head and shoulders if you really count that. But we know there's an 80% chance price will travel to the VAL. And so what do we see? Price goes, price pumps. Fast move is what? The false move. And so this is the beauty of it. Since we have a short bias and price pumped, you're going to think, oh man, this was at 20%, it didn't work out, yada, yada, yada. You ape in long, what happens? You get murdered. And then it comes all the way down. And you think, oh man, I had it right. This is why you start building your shorts at key notable levels. So when you see this happen, you officially have a short bias, which is so powerful, right? If you directionally are correct for the day, it almost doesn't matter where you get in, you're directionally correct. But this is why we have other tools like Armageddon and DSR, etc., to help you get in. But we have our bias here. Then we see there's no volume in here. So what needs to happen? If we're not piercing this with volume, but we've satisfied the rules for the 80%, that means we're going to run higher because we have to bring buyers in to fall, right? The bear needs to stand up to attack, right? He has to draw everybody in before he can take their money. So we get a little pump here, and then we come slamming back down, right? We re-break this structure so we know, oh, we're going. And so, of course, we come back down again, come back up, candle close. You could get in short anywhere in here. Even if you miss this, this is the power of that 80% rule. You know our target is the VAL. So you could get in here, almost, not quite, pains you a little bit, and then bam, eventually gets there. So let's do another example. So now, let's say, orange day starts, right? We're opening up inside of yesterday's value, But what are we still concerned about, right? With market profile, so much of it is previous day, and that's why the 80% rule is so cool, because it doesn't just revolve on previous day. So notice we open up inside of value. So normal people, market profile, they're going to say, oh, we're going to have a balanced day. We want to fade the VAH and VAL of the previous day. So what happens? Price meanders around. Of course, gets to the VAL. All those people that faded it, aka bought it, boom, VAH, faded it, bought it, boom, right? And notice why we stopped here. Because this was the normal people using basic information of market profile. But the people who know a little bit deeper, which is going to be you now after this video, understand that our overall target is the VAL. And why is that? Well, if we extend this line right here, a little messy, but you see there's 30 minutes closed. And right here, we have officially closed 2 30-minute, right? 415s. And so where's our target? Down here again, because we closed inside of here. And I see, right? Oh man, I missed it. No, you didn't, right? We know the target is here and nothing is free. So since you know nothing is free, what is the market going to try to do? It's going to try to take your money. And so just like back here, how it pumped before it eventually went down, look at this. It dumps. You think, oh, I still got all this time. I'll take this. Comes up, stops you out, and then goes to your target, right? And so this is why you do not quick impulse react. This is going to tell you directionally where you're going to be going. This isn't like an ape in, buy here, buy there. No, this gives you the direction, and then you look for key notable levels, and that's where you get your short or get your long, etc., right? So for example, we opened up inside of value. We expect a ranging day, so fade the edges. Comes down, you fade it, you get a long, you get a short, but you've already known that we got accepted down here, had that POC bounce. So where are we naturally going to go, right? VAH of yesterday, which we do. And once you see that the sellers truly are there, now you are beyond confident. Get in. And where are we going? To complete the 80% rule. And this is what is so cool. Look at the reactions at these levels, right? You know this information wouldn't be real if there wasn't good reactions at the level. Look at this. You got out on a wick, right? And then we dump into it again, let those guys get the last of their orders out, and then take off. But this is what's cool. So once this happens, we have now officially cleared out all of the 80% rules in this range. We did it, right? We got all the way back to the low. We have done it. And so now it's almost like a quote unquote reset because we've set everything. We're good. We set it all, right? And so now what are we looking for? We're looking for another play. So we open up new day start right down here outside of the previous day's value area. So we're bearish, right? Price goes, doesn't go anywhere. And then we get a bullish engulfing right here. So this is where we say, maybe there is a trade to be had, but we're looking for 80%. So we come up, have some time in there, close 15, 30, 45, 1 hour. So right here, we have officially closed 2 30-minute candles back in where? Back in this value. So where's our target? These two VAHs. Personally, I would choose the lower one and let the second one fully take me out just because you don't go broke taking profits. But from right here, what is that? Like a half, I don't know, 0.5%, 0.75%. Yeah, 0.5 basically. You basically got a 0.5% trade right there. And of course, it pumped, so maybe you got lucky and it didn't hit your TP. And you got to exit up here. But regardless, 80% rule completed, done, right? So you had multiple 80% rules that worked out. And then you know down here, boom, boom, all those 80% rule traders got out of their positions. And then, of course, we figure out we've been accepted back inside. And so what do? Right? We target the VAH. And once we blow past that, that's just that day, right? If you could hold it up there or whatever, do what you do, but I'm a really strict on trading plans. Once I would have taken profit here, I don't care that it went up here. That's none of my business. I didn't plan for that, so I don't trade it. Just like my stops, when I get stopped out, if it continues going down, I don't say, oh, I saved a bunch of money. No, that was my plan, right? So let's continue. So now that we were able to take advantage of damn near this whole range, let's see where new day starts. New day starts right here. So we are looking at last Thursday. So new day starts, right? We come up, get rejected by the previous day's POC, but now it's not naked anymore. And so what happens? We don't have a bias. We're inside of the previous day's value. We expect a balance range day, which would mean what? Fade the edges. So we get our first come down. We find support because all the normal profile traders, but look at, this is what's interesting. And this is why the profiler, you can extend previous day's value areas for this exact reason. So since most people are thinking, oh, we opened up inside a value, fade the edges, right? It worked over here. Fade, fade, right? It worked over here. So why wouldn't it work now? That's what a lot of people are thinking. And that's why we had this reaction at where? The VAL. Because we opened up inside a value. People are thinking range. But what do we notice? Well, we notice that we've officially, right, 15, 30, 45, 1 hour. By right here, we've known that our now target is down here. Why? 80% rule. We've closed inside of this value 2 30-minute candles. And again, right, for this play to complete, that means we're going to close inside of this value. So truly, based off just these candles here, we know market's going down here. Are you tracking? Are you starting to see the power of market profile and the 80% rule? So I'm gonna draw that play out. Again, new day start, touch the POC so it's not naked. We have our value areas extended. We come down. What happens since we've closed in here? We are looking for shorts. So we start noting key levels. Well, we know we have a cluster of value areas, so we know that will offer resistance. We also know this POC, even a little higher, will offer resistance, so we mark out all of our zones where we're looking to short from. And then the beauty is, since targets on these 80% rules are going to be inside this will now create a deeper 80% rule. So now we get a damn near 1.8% trade. And so the beauty is if you were quick, you could have gotten a short here and rode it, right, to where? Notice the reaction at these levels. Notice, right? 80% rule is in effect of these. Where do we go? Directly to where? To complete the 80% rule. And look at the reactions. Boom, boom, boom. People exiting those positions. And then what happens? The bear needs to stand up to attack. Once we completed these 80% rules, now we know we only have this left. Where's our target on that? All the way down here. But look at the reaction here. We know we're going to head up. And so what are we looking for? We're looking for strong levels that we can short from. So we know we have a huge cluster here of 2 days VAH. We also have some resistance here and here, right? Well, this green one wouldn't be here yet. So just here from the previous day's VAL, right? But look at this, right? And you might ask yourself, well, Box, look at, we accepted back up into here the 2 30-minute periods, right? That's what we did. Yes, but this was still in play. So you might have to ask yourself, what makes most sense? Because, of course, it won't work out like this every single time, but you have to ask yourself, what makes the most sense? Well, we've been trending down. We've been trending down, lower highs, lower lows, etc. all these 80% rules have been playing out, and then you see this rejection off the VAH, rejection off the VAH, lower high. This is going to go, right? Well, I hope that makes sense to you. That is a trading strategy strictly used in market profile. And then I'm going to give you one more, which is in the video over here. So you will have two trading strategies to use while you learn more about market profile. And I hope you enjoyed. Check out the next video. It's about balance. It is a very similar strategy, but there are differences. And I break those down in the next video. So you'll have this, which is the 80% rule. And then after you watch the next video, you will learn about balance, and that will be the second strategy. So you will have two strategies to use while you learn more about market profile. I hope you enjoyed, and I'll catch you in the next one.